To remain updated with the latest business news, click on the bell icon.
Earnings season starting with a bang, with tech majors reporting a healthy set of numbers. Let's now find out what Q3 has in store for banks. Sakshi Batra is here to tell us what to expect this season.
That's right, Abha. Well, private sector lenders are all set to report their results for the third quarter starting this week. Now, this quarter of FY22 is widely being seen as having been a strong one for these Indian banks, both in terms of balance sheet growth as well as the asset quality. Now, this optimism is already being reflected in the movement of some of the bank stocks over the month so far that we have seen. Now, analysts expect lenders to report a surge in net profit this time around. Jefferies India has estimated an increase of 37% on a year-on-year basis in the net profits of banks at the aggregate level. Also, the brokerage firm has said that a healthy retail loan may definitely contribute to broader loan growth this time around. Large lenders, especially such as ICICI Bank, HDFC Bank, Axis Bank, it says are expected to report a double-digit loan growth this time around. As far as slippages are also concerned, Jefferies is in its preview report has said that it expects a slight moderation in slippages and the credit costs, and therefore the asset quality will improve. It believes that banks may see the tail end of downgrades and provisioning from COVID wave 2 as well. Now, an ICICI Direct Research note has suggested how private banks with healthy capitalization should now grow at 10%. Their credit growth also has been strong and are continuously gaining market share from public sector banks as well. Now, most of the analysts do believe that the net interest margins for most banks may not improve in this quarter sequentially, and the growth this time would largely be driven by lower provisions than the NII growth. Now, most brokerage houses have also expected that large banks will continue to outperform the mid and the smaller banks even in this quarter, and there is an expectation from the large banks to post an NII growth ranging between 9 to 12%. Now, what also will be key to note is that the third wave of the pandemic is gathering pace. So what's the management commentary on the business growth outlook and the asset quality per se will be important to track. The outlook provided by the management of banks will also be critical to assess the FY22 performance as a whole. For now, the impact of the rising COVID cases on the economic activity does not really seem intense and may be limited to already weak pockets of credit as of now.
If you like the video, do like, comment, share and subscribe.